The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, I'll tell you what, for most of the day on Tuesday, it felt like grains, corn, beans, wheat really just couldn't gravitate away from unchanged. We kind of just held a couple of cents either side of that all day long. A lot of outside market pressures that seemed to be in front of us here. I know that had an impact, especially in the cattle market on Tuesday. There's a lot of things in front of us. It feels like we're in a bit of a holding pattern right now. We're going to talk about all of this and more. Joining us today, Jacob Burks with agmarket.net is on the show. Jacob, good to catch up with you again, my friend. I hope you're doing well.
Oh, yeah, it's a good rainy day here in southwest Wisconsin. Hopefully we're filling up that big ditch that goes down the middle of the country here. So, yeah, it's one of those gloomy days. It's a good day.
I was going to say, I know that's one of the concerns, I think, behind this market and agriculture is, can we get the river levels on the Mississippi River up to snuff here for this fall? But I think ahead of that, we got other things in front of us too. I mean, general harvest seasonal type pressure in this market, but you throw in some economic headwinds on the day Tuesday, and all of that together kind of just combined to nothing. I mean, we didn't move a whole heck of a lot. Corn, beans, wheat on the day, Jacob.
Yeah, I think we're probably putting in like a 7-8 cent range here in the corn market. Bean market, I think we got to 17 cents, which in the bean market, that's not a big deal anymore. Wheat bounced around here for about 10 cents. So, yeah, it was just a back and forth trade on Tuesday here. But I would say that the quiet before the storm is probably what we're seeing ball up here in the grain markets. The big quarterly stocks report, which can also be a production side of it now that they adjust the production in the September report. So there's just a lot of things coming at the end of the week. A lot of I guess complacency right now because we're looking at a lot of news that's coming in, and we're trying to validate what is coming off the combines right now. So yeah, a quiet day on Tuesdays. Sometimes quiet days are not all that bad. Wish we could see that in the cattle market. So
I was going to say, yeah, I wish we could see that in the cattle market. We're going to talk about that a little bit later. In the case of grains, you brought up the quarterly stocks report on Friday, and it really feels like, to me, this trade is going to square up positions ahead of that report. Pre-report chatter, estimates, etc. I mean, is there anything that you're watching closely, Jacob, heading into that report that could be a big market mover here in the grains potentially?
I think the talk has been throughout the supply demand numbers. We know some of this known demand, right? Some of the known demand of how much exports, how much we see in the crush and the soybeans. That factors in, and we have a very good idea what the outlying factors are. What are they going to do with the feed? And what are they going to do if they come in and try to change the production? So not a lot of correlation. If you go back and look at these, the Q4 final report, not a lot of correlation of what they've done in the first three adjustments to what they're going to do in the final adjustments. Sometimes if they're raising one, they might lower it the next time. So if you can sit here and try to anticipate what they're going to do, but it is kind of a crapshoot for what we're going to see the USDA put in there for the feed and what we fed in the final quarter of the year for the corn market, and if they decide to change any of the production from last harvest.
Well, in the case of this corn market, I've touched on this the last couple of days here on the show. It feels like we're trying to establish a new sort of short-term support, 475 type level, bouncing off that here, and kind of just chop it around in this corn market. Basis, though, I know basis level still kind of churning around trying to find their harvest lows, it feels like. So, I mean, you look at this corn market as a whole, does this feel like, 475-ish on the board, kind of our level right now?
Yeah, when you spend so much time in one area, I mean, the 480 and the 480 straddles when you're selling options and you're looking at options, the volatility in these options have been very quiet because the market hasn't moved very far away from those type of strike levels. So yeah, it's put some type of comfort zone in there. You can look at the charts, you can draw some trend lines. We did come down and break the support line that we had, but we popped right back above it. Some of these technical indicators that we look really close to haven't, and all the commodities have traded, haven't held, haven't been a solid indicator that they usually are. So there's been some rules that have been broken. And it's just become a pretty stagnant market. I mean, the beans, you could say the same thing around the $12.90 to $13 level. Wheat market has gotten comfortable around the $5.80 level. It's waiting for news. It's waiting for information. We talked a lot about what we're going to be. What did this heat do to the soybeans? What did the heat do to the fill and the bean pods? What did the heat do to finishing out the crop in the corn? And there's just not enough information out there right now to put together a really good idea and thought process if we're even going to be lower or higher than what the USDA has us right now.
What are some of that early harvest results you're maybe hearing? Are you hearing anything of note, Jacob, at all? I know the little bit I've heard has been highly variable depending on your location, really, essentially, Jacob.
I have to do my most scientific, research, and the guys I talk to try to ask the same questions so we can kind of put things in perspective of were you better than last year or are you worse than last year? When you tell me the numbers, is that above your APH? Just try to get that consensus. And realistically in the corn market, I personally, I've talked to people through the Delta. I've talked to people through some of the southern part of Indiana, Ohio. I've talked to a lot of people in the Kansas area. I haven't found people. Kansas areas, I've heard record crops. Southern Indiana, some guys had, told me they had record crops. So the corn market, every time I talk to someone, it's been, better than last year, better than APH. Randomly, I'll have a guy that's just, isn't too pleased. Maybe what they were last year, a little bit less. The beans I've started hearing some guys in these later, in the southern part of the corn belt. Some of the later stuff that they've touched, some of the later stuff they've harvested. Is getting a little bit drier and a little bit less pod fill maybe. So as we go north, if that continues and that type of story is what we hear more of, that's when you can start getting into some of these surprises. Oh, maybe we are a little bit lower than that 50 bushel. But from right now, what you've heard, I think the story is as better than expected is what I would say.
Sure. Well, in the case of the grains overall here, corn, beans, and wheat, I know you mentioned we're waiting for news. I mean, the Black Sea issue is still there. That's maybe giving us a little support in wheat as some of the, bombings ratchet up here the last couple of days. But that's an old news item, it feels like. We got the quarterly grain stocks coming up here, of course, at the end of the week. And then we got the economy on the other side, too. And, a dollar setting fresh highs, the VIX, Wall Street's Fear Index, setting fresh highs. You have this kind of talk of stagflation in Europe and the U.S. So I know that's kind of a headwind. But even that, too, is kind of an old headline. So it feels like right now we're just trading a lot of these stories that have been with us for the last 6 months, Jacob.
Absolutely. I mean, the market's really looking forward to a report on Friday to have some facts. Now, that may be the last facts we get for a while if it does shut down. That's a whole other segment. You can have another show with someone that knows more about that. So, the market's starving for information. If you had told me Wayne Perriman with the Grain of Truth, we worked with him some, and he made a great point this morning. We were talking about if you'd have said that we heard, Ukraine continuing to bomb Crimea. Overnight, we saw Russia hit 2 complexes, hit trucks waiting to dump on the Danube. If you would have heard that story 6 months ago, this thing would have been limit up. But the fact is, they're not exporting through the Black Sea. They've made other paths. You got Russia on the wheat situation. From what I hear, they're backing down. They're not exporting as much at this point. They're not pushing that much out. So maybe Europe is coming to us. So there's little stories over there, from a global perspective that are pointing towards us a little bit. Those are great opportunities for us to have a little bit more demand issue from exports. But there's a ton of different storylines that have become old news. And it looks to me like if you go, just not to jump over to the cattle market, but with such a negative day in the cattle market right now, you're starting to see, hey, are we looking at these wages? Are we looking at these? What's the final leg of the economy that's going to push this thing to break over on the fund side of things?
We're talking with Jacob Burks from agmarket.net here on today's Market Talk. And Jacob, you brought up the cattle market, and let's segue over there and talk livestock. Really rough day in cattle. The cattle on feed report from Friday was fairly neutral, I would say. I mean, you still look out longer term, and this cattle herd continues to shrink. We're not rebuilding it yet. We had an okay day Monday, but then Tuesday came in here and just ugly looking day. I mean, what do you take away from that? Was it a delayed reaction to something in the cattle on feed report? Was it the economic woes that you were alluding to? Was it all of the above? I mean, what was going on with the cattle market?
I don't think that it really portrays anything out of the cattle on feed report. Maybe looking at some of the cold storage reports, we're slightly behind last year's inventories, and if I can't quote it, but off the beef and boneless beef, I believe we're hit records last year in 2022. So we're slightly off of that, but we're off of records. So inventories are healthy. They're rather full. You're starting to see the packers. They're in negative $51 to $55 of from their break evens. So there's some pressure there. I mean, and I think finally you're starting to see some of this, box beef. I didn't even see what box beef did here today, but yesterday we're flirting around that $300 level. So we're backed off some of the highs here. So I think that's probably what's weighing on it is most. The other thing that you're seeing is like the long position in these funds. Where else do we go? I mean, when we get to a level that's pretty high. There's some funds bailing on this move down here today, and I think that's what kind of put the pendulum just to overflow here a little bit, and we're really rushing out of there from that just pure speculative investor right now.
Midday choice 301.20, select 279.73. We were down just a little bit in both choice and select, so I mean. Nothing major there, but to your point, I just think some of that speculative money and the worries about the economy as a whole, that seems to be the biggest bear in this cattle market to me right now, that is going to keep us from moving higher. But at the same time, I also wonder, we've been churning at these lofty levels for so long. We've said it once before, I think, or a couple times before, thinking, maybe this is it and cattle's going to fall apart here. Hasn't done it yet. So I guess that's maybe my argument is, we haven't done it yet, Jake.
And that's a very good point. I mean, I always say that a healthy market has to bend their knees to jump. And I think that this is something that we could see a pullback in this marketplace and be healthy. It's not the end of the world. We're not changing the inventory of what we have out there standing in a field. Just got back from a trip out into the high desert out into Idaho. We were in Glens Ferry, Idaho, and I sat on the front porch with an old rancher, and I could hear him smile. Like you could just see like what they've had in the past is the best years he's ever had, and so they've gotten a little bit of moisture out there. They're looking at putting filling some of these leases back up with some cattle too. So the industry looks strong. It looks very healthy, and it doesn't look like it's going to fall apart as long as all the things that we've talked about. I think every time I talk to you, we talk about the demand, and if it can stay strong and stay healthy, then this market has even more to go. But it's going to take these times like this where all of a sudden this investment money that's came in here and bought it for 2 years now says where else? There's better investments to go to a money market right now than the potential of some of these commodities. So.
Well, I'm glad you brought up the cold storage numbers too, because thank you. I meant to mention that as well. Beef supply 421.6 million pounds. That was up 11.2 million from July, 18% below a year ago. On the flip side, on the pork side. Pork supply up 327,000 pounds from July, 13% below a year ago. Belly stocks were down 14.3 million pounds, but up 3% from a year ago on the belly stock side. So you look at the cold storage numbers for pork. Let's move over to the hog sector. Anything of note to you there? And two, got a hogs and pigs report coming up on Thursday. I think it's going to be an influence here as well.
I think that's probably the report that, right now, the inventory that we came out, the cold storage report, we saw. I think what we saw there was a continuation of the inconsistency between the products, right? So we've seen a lot of back and forth. The inventory is moving back and forth on these different products that haven't given us just enough to rally this. And I think that's what that cold storage report said. I think that the hogs and pig report will be the one that everybody looks for to say, hey, what's out there and what are we doing? Are we building the herd? And I think for the same type of report you can say, and in the hogs is what we've seen like in the grains. It's just been a steady sideways trade, and we haven't really trended this market The last month, we've seen some different tests of the different ranges, but nothing really moving here. So we're just staying in that continuous sideways trade. I think there's some major support down here where we're at right now in this December contract anyway. And I think if that breaks over and we have that negative, building a little bit more of inventory or more marketing in those hogs and pigs report, we could see a similar story that we're building right now in the cattle.
Well, as we look at these markets as a whole, I think a good spot for us to think about wrapping up here today is I know it's a busy time of year, obviously, with harvest season here, and a lot of folks are running a million miles an hour, but just the way that these markets are kind of sitting, coiling right now, it's not a time to get complacent, even though we're really busy right now, Jacob.
No, this is one of those years that you have to go back and remove the last 2 years from your brain and look at how we used to have to market grains whenever we had a carry market, and there was the potential, there was the opportunity for you to put grain in your bin and make those decisions later down the road that was already paying you for that. And so when you look at what kind of carry we've seen here and what these spreads have done for you, you have to go back and realize, hey, we're not looking at the home runs here. We got to hit base hits again, and I think opportunities that are out there now, basis opportunities. That's the one thing. Basis has fluctuated. The river markets, we're right here on the river, and it's just non-existent. The bid is non-existent, but you have the ability to look at these, ethanol plants and the crush plants that are just, that are carrying the market still. Some of these rail houses are very healthy around here, but I think that what we should be looking at is maintaining this. The price we have and leaving the top side open on it and doing it in multiple different ways. I have no problem with the way cash flow is and the interest rates being as high as they are. There's some opportunities for cash flow now, and then looking at some type of call strategy out into the spring to re-own this stuff. Depending on where you're at in your operation and what your notes look like. I mean, this is a different time. We haven't. There's probably a lot of farmers out there my age that have never even farmed don't even know what interest rates are. We've never been in this type of environment.
Well, a lot of things to definitely consider, and again, just staying vigilant, I think, is the biggest thing. Whether it's grains, whether it's livestock, and again, too, watching the end of the week, as we mentioned with that stocks report, the potential of a government shutdown. There's a lot of stuff in front of us, so making sure you stay vigilant. And I'm sure if folks have questions, Jacob, you guys have a lot of great intel and research and just a great team available to answer some of those questions, especially during a busy time of year, don't you?
Oh, yeah. We got we just encourage everybody to go look at our intel. We've even got smart people that are a lot smarter than me that write stuff and have a lot of good information on our website. We encourage you to look at that for a 30-day free trial. And I would, look at our app. We have an app that you can go in there and put some what-if strategies that really kind of boil it down to what's best for your operation.
You can find all of that online, agmarket.net. Again, that's agmarket.net. And I know as well you guys have your annual Farming for Profit, Not Price conference coming up in Nashville, Tennessee again next February, I believe, right?
Yeah, it's going to be the weekend before the Super Bowl. We're coming down there to hang out with Jesse Allen.
Well, my door's open, so we are looking forward to it. Again, get all the details, agmarket.net is where you can find them. Jacob Burks, appreciate the time as always. Thanks for joining us on Market Talk. We'll talk to you again soon.
Hey, thanks for having me, Jesse. Appreciate it.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.